Good evening, everyone. This is Tony LaPorta. This is with simplerfutures.com. This is the free video for June 17th. And we're going to make it, we're going to do things a little bit different here. I'm going to show you reasons why these markets are crazy, absolutely crazy in what we've seen today the last couple of days. And I'm going to read for you the first many bullet points of my commentary that I wrote about 15 minutes ago, or finished writing 15 minutes ago, and this will go out to my readers in the morning. The first thing, I've rolled the pivot points in crude oil. So we're looking at August crude oil, and I've also rolled the pivot points in the grains to the new crop. New crop being November soybeans, December corn, and December wheat. And I provide support and resistance pivot points for those markets, along with indice markets and treasury markets and the like. But I had a long-term wheat trade on that I initiated in March. I was long around 461. Took half profits, I don't know, around $5, something like that. A little bit higher than that. And the balance, I basically took about 40 cents out of the trade. And now I have another trade. And I'm in December, not quite as many contracts. But it says here, and I'm losing money on this trade. I'm losing 17 cents on this trade with already taking a $3,000 loss. But I've written here reasons why I don't mind losing money on a long-term wheat trade. And I made a determination that this would be the summer of trading commodities. I took over 40 cents on average in May and June on the last long-term wheat position. This is not to include all the times I scalped in and out. I am taking about 17 cents of heat on my new wheat position, which is not nearly as big a position as the previous position. I did take a $3,000 loss on 5 contracts. I'm still long 25 December wheat at an average price of 521-ish. December wheat closed today, I think, at 504 and a half or 504 and a quarter, something like that, 504 and a quarter. All in, so far, I've given back 25 to 30% of the monies made on the previous wheat trade. So none of us get it right, and I'm definitely not getting it right. But what I'm not doing is I'm not trading some of this other brain damage, and here it is. The E-mini S&P, today's low was 40.75, and this is SEP. So the high was 21.19 and 3/4, but that was June, and the SEP's trading at about a 9-handle discount. So basically, in 5.5 days, the SEP broke 70 handles, basically from a high of 21.10, maybe 21.11, down to today's low of 21.20, 40 and 3/4. Broke 70 handles in 5.5 days. It took a half a day to rally 30. A half a day to rally 30. Over the years of this bullish stock market, I don't know how many times I've seen this bullish movie before. Everyone gets all bared up. Everyone gets all short at the bottom of a big break, and the market comes roaring back. Like I've written here, if these indices gap open higher, we could see a powerful day of short covering. The reason I am thrilled to be losing money on a long-term position in wheat, I've been bullish this stock market, and I'm not getting hammered trying to be long this market. The treasuries, just forget it. I sit in awe of this market. It's so nice to be 100% in disbelief that the Treasury bond could trade 171.07 today, a new all-time high. And I'm not losing money in this trade, trading this garbage. I've been bearish. I've been bearish all year, and we're trading at new all-time highs. And the funny thing about this Treasury market is we could see a powerful rally on Wall Street tomorrow. And the bond could still trade 172 even, and none of that would surprise me. And in all honesty, like I've written here, if the bond does trade 172 even, what does that really mean? That means that long-term interest rates, when the bond goes higher, when the future goes higher, long-term interest rates are going lower. And guess what lower interest rates means? That's a positive for the stock market. Always has been, always will be. Gold, anyone check out the gold today? High at 1318.90 by the end of the day, 1280.10. You want to trade gold? This is like I've read here. This is career-ending type moves. No way. No, thank you. Yesterday, Euro. Oh my God. After the Fed announcement, Euro trades 113.38. This morning, it trades as low as 111.69, rallies over 100 points to settle at 112.75. Tell me again that losing 5 cents today, mark to market in my wheat, isn't looking too bad right now. It is looking pretty good. How about the yen? Yen closes 150 higher. What's that old correlation? Yen higher, stocks lower. Oh yeah? Well, the Dow said bollocks, and the Dow gained 93 points today. How about crude oil? Crude oil loses $2 today, but the Dow closes 93 higher. That was easy. How's that wheat looking now? And you just know it, that a lot of shorts in the stock market looked at crude oil, looked at the yen, and looked at the stock market and said, this rally is BS. I'm staying short the stock market. And guess what? Tomorrow's a new day. And if these markets gap open higher, that's all she wrote. So I got a little bit more down here. Don't lose your ass on a Friday, blah, 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 blah. But that's about it. So that's a bit lengthy for a free video, but I think it's a good one. That's about all I have. This is Tony LaPorta with Simpler Futures signing off.